Welcome back to another video. Today we are going over ICT's Seek and Destroy market profile. We're going to cover what it looks like, what it is, how to and where to anticipate it, and ultimately how I utilize it in my trading and analysis so I can understand where price is likely to draw to on the day, as well as when I should be avoiding the market. Alright, so with all that being said, let's hop right into what a Seek and Destroy market profile looks like, as well as what a Seek and Destroy market profile is, as they do go hand in hand here. So, first things first, we have to understand what it looks like. And this is a pretty crude example or drawing here, but essentially, this is what a Seek and Destroy algorithm looks like. And it doesn't always have to end up here. It can be inversed or flipped, but essentially, you're looking for a high and a low to be created, and then you're looking for a lower low, a higher high, a lower low, a higher high, a lower low, and a higher high. And why is this called a Seek and Destroy profile? Well, because the algorithm, which I believe chooses price or direction, is going to be taking buy-side liquidity, then sell-side liquidity, then buy-side liquidity, then sell-side liquidity, then buy-side liquidity, and so on. You get the idea. We're taking buy stops, then sell stops, buy stops, then sell stops, buy stops, then sell stops, and we're taking everybody out of the market. We're seeking liquidity, and we're destroying it, and then we're going the opposite way. So, now that you kind of understand the basis of a Seek and Destroy, I do want to just mention that lots of the time it will look something like this, and it's not going to be super clean and simple as that initial drawing was, because it is looking to seek and destroy liquidity, and that's not just external liquidity. Lots of the time you'll see price come and take forms of internal liquidity before taking external liquidity, and then coming back up here, and then maybe even coming all the way back down here. It just is seeking liquidity at all times, and it's not taking a directional bias. Now, what I've noticed through trading it and through screen time is that at the end of the day, if we're talking about a daily market profile, or the end of the week in terms of Friday, there can be a big displacement move in one direction, and that's really to just clear out all of the liquidity, internal and external, within the range or the move. And if you're not involved in that, then there's no point in trading this at all, and you're better off to just stay away for the entire day. So, what I do want to talk about here is what it looks like in terms of a daily range, and we'll do a weekly market profile on a different day, but the same theories should apply regardless. So what you'll tend to see is an Asian range form here, and then you'll tend to see a London range, which will be bigger, and then you'll see your New York range, which will be even bigger on both sides, right? So within here, you're going to see your initial range put in, then you're going to see your higher high, your lower low, your higher high, your lower low, and so on. You get the idea. We tend to create our initial range, take out both sides of liquidity, and then take out both sides of liquidity again. And this is what we're going to be talking about in the example today. So now that you understand what a Seek and Destroy market profile looks like and what a Seek and Destroy market profile is, let's take a look at how and where to anticipate a Seek and Destroy profile in terms of a daily range or market profile. Okay, so now that you understand what the Seek and Destroy market profile looks like and what it is, let's now understand how and where to anticipate the Seek and Destroy profile, and how I utilize the Seek and Destroy profile to build daily bias, as well as understand when I should be sitting out of the market and not destroyed through the liquidity sweeps. So, without further ado, these Seek and Destroy algorithms will tend to be placed early on in the week or before big news drivers. So, I generally look for Seek and Destroy market profiles on Mondays. Lots of you guys, I'm sure, get chopped up and hurt on Mondays, and that's your least profitable day, and that's because you're being taken advantage of simply by not knowing that this is what's happening. On Monday, this is what you're seeing, and you're not realizing it, and that's because you're like, oh, we swept liquidity, let me get in on this retracement into this fair value gap. Well, you get ran through, and then you get stopped out. Oh, and then we ran this liquidity, let's try it one more time. We get ran through, and we get stopped out. I hope that's starting to make a little bit of sense, but that's essentially what's happening on these Seek and Destroy days. So if you're not on side, you need to get out of the market quickly. This is a nimble day or a profile to be trading, and it's realistically a scalper's market in my opinion. So we're going to be looking for it on Mondays, or we're going to be looking for it before highly anticipated news drivers. So things like CPI or PPI, as well as FOMC, and sometimes NFP or non-farm payroll. But I believe, from my experience, those are less likely to cause a seek and destroy profile before the news driver. So we don't have to worry about it too much on NFP weeks or days, but definitely before FOMC, definitely at the beginning of the weeks, and definitely before things like CPI or other highly anticipated news drivers or events. So, how do I utilize it? Well, if I'm coming into the New York session, which is the session that I primarily trade and pretty much actually only trade. I don't really trade London, and I definitely don't trade Asian. So when we're looking at a market profile that looks something like this, going into New York session, well, what I'm noticing is we've created our Asian range and we've taken out both sides of buy side and sell side liquidity. This should give you an anticipation that we might be seeing a seek and destroy day, and that you should be expecting a run on both sides of liquidity. Okay, so this is what you should be expecting in the New York session, is for some form of sell side liquidity to be ran and then buy side liquidity, or vice versa. Now, like I said, it's not always going to be this simple. You're not going to take a short for the AM session and then it's going to reverse over lunch and you're going to take a long on the PM session. Please don't think that, because it will not work. Or it won't work regularly. So with that being said, let's hop into the chart and let me try and show you a more lively or real-time example. Okay, so now that we're looking at price here, and this is actually going to be Monday's price action here, I'm just going to turn on my little indicator here to show me where the Asian range is, and we've got opening prices here, but that's the time. It's a topic for another video, but essentially what you're looking at here is this Asian range. Okay, so you can see this kind of looks like expansion during Asian range. This isn't even really consolidation, but what's important to note is we have made this Asian range here. Okay, so we've got this high on the Asian range and we've got this low on the Asian range. And what did we do? Well, we ended up taking out the buy side of the Asian range here. We deviated above the buy side, creating this level of liquidity up here. And this is London high now. And then you have it come all the way back down through the Asian range, through the Asian low, and created a new London low here. And then what did price do at New York open, or the news embargo lift? Well, we ended up running this sell side liquidity again, creating a new low. And then we ran that one more time. And then we ended up coming back up, taking out this side of buy side liquidity, this side of buy side liquidity, and ultimately at the very end of the day, running up for the London highs, which is what I was expecting throughout the whole day, because we noticed early on that we had this Asian range that was taking out both buy side and sell side liquidity. We retraced a bit, took out sell side liquidity again, and this could be seen as a classic sell day because we manipulated up. This was A, this was M, and then we were looking for D on the way down, but we didn't quite see that because we weren't expecting it on a Monday. So now let's take a look at what I was looking for during that day and session. Okay, so generally speaking, I do like to take my pre-market analysis here, looking at market profiles on the 15-minute time frame. I usually start my day on the 15-minute time frame here, and I can see that we have this Asian high that was this Asian high was swept in London session, creating a London high, and then we have this Asian low that was swept in London session, creating a London low and creating a big range here in London. We also ended up creating this internal level of liquidity right here in London. So if this was a classic sell day, you would have seen us probably take out this high and then continue lower after tapping into this fair value gap, maybe jumping into a breaker up here, but I would have been mostly looking for shorts off of this. However, given the fact that it's a Monday, we don't expect expansion days on Mondays, and seek and destroy days are more likely. So there wasn't really a bias to go lower, and more so, there was a bias to take out this London high. So the last thing that I do want to say here is when identifying this, it might be easy for you to take this Asian low, go to the London low, and you can see that we are rallying or finding support off of this trend line. It's one of the few times I'll use a trend line, but we do actually end up creating this kind of broadening formation typically when we do see seek and destroy conditions or market profiles. So given that information, sometimes we can expect price to take out this low here and then come all the way up to the high, or vice versa. If we're a little bit bullish going into the New York open, then we can expect lower prices based on this pattern or schematic here. So I don't generally need those, and I do like to use those for confluence as potential bottoms or tops if we're in these types of conditions or ranges. However, mostly I'm looking at levels because they are less ambiguous than trend lines. So we know that we've got our London high here untapped. We did take out London low, so what's most likely next? London high. However, the only way that I really like to take seek and destroy trades or seek and destroy AM trades is I really like to look for our opening range, and I look for a sweep of the opening range, and that's a little nugget for you. But generally, at 10 o'clock here, this is our opening range. So from 9:30 to 10 o'clock is our opening range. So although this is our low of the day, we do also have this low for the opening range. And I'm not necessarily going to get into why that is, why there's lots of liquidity on these levels at this point, but it's really quite simple. But the most important part here is what I would have been looking for in the AM session is a sweep of this opening range low, potentially and ideally a sweep of this low as well. We can get both of these, form a breaker, a 2022 model, something like that, where we can get long, and then we look to target these London highs, and I would probably leave a runner for a bit of an expansion upwards to take out this broadening formation. Now, with that being said, we can see that price didn't quite do that, and we end up displacing above this high. Now, since I'm bullish, because I want this London high to be taken, I'm not treating this as a way to get short. Now, could that have worked? I'm sure you could have found something, but essentially there wasn't any good setups in my opinion anyways, and I didn't want to go against the seek and destroy market profile, especially not when it's against my bias or direction. So we end up creating or engineering liquidity here in the form of these relative equal highs, which tells me that we are even more likely to take those out now because I am anticipating this high to be taken. If I was anticipating lower prices, this might be okay, and we might even find some SMT here between the dollar index or a different indice. But for this, the point of this video here, and what I was thinking here is this is not done, the rally's not over. Anyways, we end up chopping around here, creating nice equal lows here, so I'm just going to mark those out because I did take this into account when I was analyzing for the PM session here. We can start to make some low resistance liquidity up top here in the form of these relative equal highs. And this sure looks like accumulation to me. If you've watched my accumulation, manipulation, and distribution or power of 3 video, this will make a little bit of sense to you, and you can see how these concepts start to form together. So what we're looking at here is potentially our accumulation range, right? And we might take out this low, we might take out this high, but essentially what's important here is we see this range. So if we are going to break to the upside and manipulate to the upside, we can expect to take this liquidity, and then we can start to look for shorts on the expansion down. And if we're bullish, like we are in this case, we can anticipate price to come down here into lower time frame PD arrays, which in my opinion, and what I was looking at here was this 5-minute fair value gap, as well as this 15-minute breaker block. And if you know about the unicorn setup or trading with confluence, this is one of my favorite setups in my opinion. It tends to play out quite nicely. The only thing that could have made it better was if we had swept more relevant liquidity instead of the form of just this internal single low here. But the point is that we end up coming down into this confluence area, this unicorn area off an AMD setup, and we end up tapping in here. And I actually didn't take any futures trades based off of this, unfortunately, but I did take a SPX call right here on this candle as we tapped into the breaker. So I was long here looking for our expansion to the upside. And the only reason why I took SPX calls there instead of futures was because I wanted to take advantage of the IV crush that comes from a fast and aggressive sell-off like this in a manipulation leg. So I got long here, and then I was looking for reasons to get long on my futures account, and I wanted to see us create fair value gaps that we could rally off of or enter off of, or potentially even use inverse fair value gaps here. But as you can see here, we actually don't do any of that, and it was actually at this candle here that I got stopped out in profit for about 130, 140% I think on my SPX calls. I was just trailing my stop loss up the whole time. So not a bad trade, but unfortunately I wasn't able to get any futures action from this. And I'm just going to adjust this so it's a little bit easier to see here, and it makes a little bit more sense. So we've got this accumulation range, then we've got this manipulation down, and then what follows, that's right, our expansion or our distribution leg to the upside to our target or terminus for the day. And as we can see here, that ultimately gets ran through in power hour in the final 15 or 10-minute macro here as well. Now, the last thing that I do want to leave you with is just a reminder that seek and destroy conditions are difficult to trade in. So if you are taking losses on Mondays and you can't figure this schematic or market profile out, please step away. Take some time off and wait for those A+ setups. And if they're not A+ setups, don't take them, especially not on days like this, because you will get burned and it will hurt and you will FOMO into the move only to get retraced on and stopped out. So just be cautious, be patient, and demand a perfect setup from the market. Otherwise, seek and destroy conditions will not be your friend. Now, with all that being said, guys, if you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer them. And until next time.